The Singapore equity market has been a stellar performer in 2024, outperforming most markets in Asia and indeed keeping pace with the US markets. This is the first significant annual move in the Singapore market for more than a decade, and we believe investors are positioning for further performance in the Singapore markets for the next 2 to 3 years. Here are 3 megatrends that could drive the Singapore markets into global prominence over the next few years. Singapore offers an oasis of safety amidst global geopolitical uncertainty. The Singapore banking system has been a major beneficiary of this global megatrend, continuing to attract foreign funds into the Singapore banking system. With uncertainty unlikely to abate under a Trump administration in America, we can expect Singapore banks to be a key beneficiary in the foreseeable future. After more than a decade of industry consolidation, Singapore industrial firms are poised to benefit from a global capital expenditure cycle and gains in global market share. This reflects how capital expenditure is likely to shift away from software in the past into hardware in this coming decade. This chart, which goes back 30 years, illustrates how Singapore industrial firms go through 10 to 15-year cycles. This coincides with the useful age of long-term infrastructure assets such as marine vessels, aircrafts, and power plants that undergo a replacement cycle. Therefore, having survived a period of industry consolidation, our offshore and marine, utilities, aviation, and even e-commerce companies are now in the position to reap the rewards of market share gains over the next few years. The higher-for-longer global inflation environment has diminished the attractiveness of bonds as a portfolio hedge against equities, as bonds have become more correlated in movements with equities. This is leading global asset managers to consider shifting allocations away from traditional bonds. Singapore equities are well positioned to attract funds seeking an inflation hedge due to its attractive and increasing dividends. This is important because it offers investors the comfort of offsetting any further increases in inflation. Increasing dividends for Singapore equities can be well supported by strong fundamentals in the banking and industrial sectors. Singapore equities are at a once-in-a-generation turning point. Looking at the relative performance of Singapore equities against global equities, we can see that Singapore equities have bounced off a major low not seen since the Asian financial crisis, supported by robust fundamentals of these 3 megatrends. We expect Singapore equities to continue to attract global interest for the sustainable future.